Hello and welcome to The Explainer. Today, we're diving into something you might not have on your radar, but maybe you should. We're going to break down exactly how to invest in a market that's just brimming with potential, but, still flies way under the radar for most of the world. And it all starts with a question I bet a few of you are asking yourselves right now. Are you that investor who's always on the hunt? You're looking for real value in places other people they're overlooking them. If you're getting a little tired of the same old, crowded, well-worn investment paths, then you're asking exactly the right question, and you are in the right place. So, where is this hidden gem? We're talking about the Pakistan Stock Exchange, the PSX. Now, a lot of savvy analysts are calling it one of Asia's most interesting and, get this, most undervalued markets. So let's dig in and see why it's starting to turn some heads.
So what's the big deal about the PSX? Well, it's not just one thing. It's this really unique mix of factors. You've got a market that has historically punched above its weight, often outperforming its neighbors. This is fueled by some serious fundamentals, a massive, young and growing population that drives demand for everything. And you have these emerging industries, we're talking tech, renewables, you name it, that are really just starting to find their feet. But here's the real kicker. Most global investors haven't caught on yet, and that right there can mean a huge opportunity for those who get in ahead of the crowd.
Okay, so the potential is definitely there. I think we can all see that. But you might be thinking, great, but how do I, as a foreigner, actually get a piece of that pie? It sounds complicated. Well, you'd be surprised. There's a specific, regulated system in place designed to make it all happen. And it starts with one little acronym. This right here, this is the magic key. It's called an SCRA, which stands for Special Convertible Rupee Account. Now, don't let the formal name throw you off. All it really is a special type of bank account that acts as a secure bridge. It's regulated by Pakistan Central Bank, and it lets you convert your currency, dollars, pounds, whatever, into Pakistani rupees so you can trade. That regulation piece is so important because it's what gives you the transparency and security you need. Honestly, the absolute best way to think about it is this. The SCRA is your financial passport, right? If you want to travel to another country, you need a passport to get in. Well, if you want to invest in the Pakistan Stock Exchange as a foreigner, you need an SCRA. It is your official ticket to the market. It's as simple as that. So, how do you get this financial passport and get started? It's not some kind of crazy, complicated quest. It actually breaks down into a pretty clear 4-step process. Let's just walk through it right now, and you'll see just how doable this really is. You'll be surprised at how, normal this process feels. First, you find a licensed broker in Pakistan that works with international clients. That's your partner in this. Then, it's pretty much your standard paperwork, stuff you've done before if you've ever opened a brokerage account. The broker does the heavy lifting of getting that SCRA opened and linked up for you. And the last step? That's all you. You fund the account, and once the money's there, you're ready to trade. You're off to the races. Now that we've covered the how, let's circle back to the why. What's in it for you, really? What are the actual, tangible rewards that make going through this process worth it for an international investor? Let's talk about the potential upside. From an investor's point of view, a few things really stand out. First, you're looking at potentially high dividend yields, meaning companies there often share more of their profits directly with investors. Then you've got those low price-to-earnings ratios, which suggest stocks could be seriously undervalued. You're also getting direct exposure to those booming sectors we talked about. And this is crucial. The system is built for full repatriation. That's a fancy way of saying getting your initial money and your profits back out in your home currency is straightforward and part of the design. Let's just zero in on this one for a second, because for any value investor, this is huge. A low price-to-earnings, or PE ratio, is a classic sign that an asset, or even a whole market, might be on sale. It's like you're getting more bang for your buck in terms of earnings compared to other, more expensive markets. It's a fundamental indicator of potential value that's just waiting to be discovered. Okay, let's get real for a minute. No investment is a sure thing, and high potential rewards almost always come with, you guessed it, higher risks. Any smart investor knows you have to look at the whole picture, the good, the bad, and the ugly. So it's absolutely essential that we talk openly about the challenges too. So here it is, the investment equation laid bare. On one side of the scale, you have those juicy rewards we've been talking about, the high yields, the low valuations, the exposure to growth. But on the other side, you have to weigh the risks. Currency fluctuations are a big one. They could affect the value of your returns when you bring them home. And, like in many emerging markets, political instability can definitely stir up the pot and cause volatility. This is the trade-off. It's the calculation every single investor has to make for themselves. So when you put it all together, the opportunity, the access, the rewards, and the risks, what's the bottom line? What's the single most important takeaway from all of this? What's the core strategy you need to have in your head to succeed here? It really all boils down to this one simple but absolutely crucial idea. With the kind of volatility you can see in a market like this, trying to be a short-term speculator, jumping in and out for a quick profit, is probably a recipe for disaster. The real key, the way you unlock the deep value here, is through patience. It's about investing for the long haul, giving the country's economic fundamentals time to play out, and riding through those inevitable ups and downs. And that just leaves us with one final thought to chew on. We're also focused on the risks of trying something new, of venturing into a new market. But in a world where the familiar opportunities are maybe getting a bit crowded, a bit overvalued, perhaps the biggest risk of all is just standing still. The risk of doing nothing and letting new opportunities pass you by. That's something every investor has to decide for themselves. Thanks for joining